Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Prince of Investment, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado, via the also beautiful city and state of Honolulu, Hawaii. If you haven't done so already, ladies and gentlemen, please go ahead and make sure you hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. As you can see in the topic today, bear market. You've seen the markets all over the place, especially the last couple months, right? Has many people thinking of what should I do now? You're logging into that portfolio. If you got a bullish portfolio, you're watching your portfolio go down and you're seeing those management fees being paid. In some cases, if you have management fees, well, even if you own ETFs, mutual funds, you have some type of management fees, right? And you're wondering, man, what's going on? What's happening? What can I do? So without further ado, I brought in a great friend of mine that I met here. He's one of the Investopedia Top 100 2023 Top Financial Advisors by Investopedia. Met him in Huntington Beach. We was at the cocktail hour, and we have Colin Overweg. He is the CEO and founder. He's 30 years old, too. The CEO and founder of his own firm he has called Advise, and we're glad to have him on today. So we're going to talk about some good stuff. So y'all tune in. He's a certified financial planner as well. So you're definitely going to get some good stuff today. So without further ado, Colin, how's it going today, sir?
Hey, better than I deserve, Prince. It's great to be here. Thanks for having me.
Definitely glad. Colin, where you at right now? You in Detroit or you in California?
So, if you hit me up any time of the last 4 years, would have been in Los Angeles, but recently moved back home to the home state of Michigan, just outside of Detroit. We are welcoming our first baby here, November 19th, so right around the corner. We had to get some support from mom and dad. You know how it is.
Nice, nice. That's a big jump from California to Detroit. I would say that.
Especially this time of year, man. I mean,
Oh,
the leaves are
oh,
changing, it's beautiful, but I mean, I got my sweatshirt on, sweatpants. I mean, it's cold out there.
okay. So, Colin, tell people about you. People who maybe have never heard you or never seen you. Tell us more about you. Who are you?
Yeah, so, studied at Michigan State University, finance, graduated, started working at the big broker-dealers, managing millions of dollars for hundreds of clients, and, just really wanted to be able to kinda serve a demographic that maybe wasn't as, prevalent in just the traditional wealth management space. I mean, the firm I worked for, had a lot of times $1,000,000 up minimums, so really looking for that more retiree client, and a lot of my friends maybe had high incomes, didn't know how to save, build wealth. So I wanted to be able to pivot and serve that demographic that represented myself a little bit more. Getting married, starting businesses, lots of fun things, lots of complexities going on, but really wasn't maybe didn't have the assets yet. So start launched my own RIA after working in the broker dealer space for 4 or 5 years in 2018. My firm, Advise Wealth Management, is 100% virtual. So I can be in Michigan, I can be in Los Angeles. I have clients across the country, and we're hopping on Zooms. And I just have the rule here that if we meet in person, we're having fun. We're not talking about business. We save business for the Zoom calls.
Nice. That's pretty good. So, people out there who don't know what a RIA is, what is a RIA?
Yeah, so RIA is just a fancy acronym for Registered Investment Advisory Firm. It's just a type of firm that maybe different from maybe broker dealers. It really just kind of focuses mainly on giving advice. We don't have any products to offer, so I don't sell any products. I don't receive any commissions. Which in some cases, I'm still making recommendations that people go out and get product. People need their life insurance, they need disability insurance in many cases, but I'm just not being the one compensated for that. And the idea is that I'm going to have less conflicts of interest, and I'm just out here trying to give advice to folks.
Okay. Do you manage any assets, itself in your RIA?
I do manage assets. Probably about half my clients have assets with me. The other half either have money kind of locked up in that 401k or some type of employer sponsored plan. So then the other half of clients just simply pay flat fees.
Okay. Now I have a question for you, right?
Yep.
You're managing portfolios, you got your clients. I don't know your sentiment on the market, but you've seen these last couple months, from January to June, you're like, okay, things are looking better.
Mhm.
out of 2022, you're like, okay, things are looking better because it was these big, the end of the year, beginning of the year was these big recession talks, but the market was saying otherwise. And all of a sudden, around about that summertime, you know, I thought it was going to be a warm summer, but it started to chill off. The market has been going down, especially very choppy, sideways, up one day, down one day. What is your feeling about this current market?
Prince, it's difficult for investors out there, man. I mean, the last 2 years has been really rough, and honestly, we could even extend it to the last 3 because now we can bring in the 30% drop that we experienced with COVID, and really, it's just been a roller coaster ever since. We're really down harsh, and then we're up harsh, and the last year and a half, it's just been kinda flat, like you mentioned. We started off the year great, which is really odd just in and of itself because we had CEOs, like Jamie Dimon of JP Morgan, I mean, largest bank in the world, or at least one of them, saying that we are headed for a recession. And we have CEOs like Elon Musk agreeing we are headed for a recession. And that is kind of how we started 2023 with that just sentiment in the air. And what has happened is we've just experienced this kind of melt upward in the market where everyone is just like looking at each other going, all right, who's going to blink first? When is this shoe going to drop? But the labor market has just been so darn supportive of this economy. People are keeping their jobs, they're still spending. And maybe this is just a little bit of that tailwind of what we're experiencing with some of that COVID money, where we're helicoptering money and a federal government was, we saw that the burr of the printing machine, all the memes there with the Federal Reserve, and maybe that's what's kind of hanging on. But to your point, the last couple months, it sounds like maybe it's starting to come to fruition. We're seeing some other markets starting to experience that already. So it's kind of one of those times to buckle up the seatbelt and maybe get ready for some additional volatility heading into the rest of the year and probably early next year as well.
Okay, so right now, if you were designing a portfolio for the next 6 months, what do you got to say? Are you going to be bullish? You're going to be bearish? You're going to sit on the sidelines? What are you doing, Colin?
Yeah, so that's the hardest timeline to be investing, right? When I'm usually giving investment advice, I actually kind of refer to it as stair steps. And I try to create like this visual of climbing up the stairs. And it's based on time horizons. And the longer your time horizon, the more return you can demand on your money. And the reason for that is because if you invest in the stock market, and this is good for your listeners to hear, is if you invest in the stock market on a day-to-day basis, you got like a 51%, call it a 50% chance of winning. It's a coin flip. You might as well go down to Vegas. People that really think of investing like gambling. And when you're investing on a day-to-day basis, I kind of agree. It is like gambling. But if you expand that to a 1 year, I don't care if you're talking 1920s or the 30s or just 1 year for the last 100 years, you now have about a 70% chance of being positive in the stock market. And if you expand that to a 5 year period, any 5 year period for the last 100 years, you're talking like a 95% chance of success in the stock market of having more money than you started with. And Prince, you can kind of see where I'm going with this. The longer your time horizon, the higher probability you have of success all the way until you get to a point where you have literally never lost money in the stock market, assuming that you stayed diversified. You're not just betting all of your assets on one company. So to bring this all home to answer your question, when I'm kind of breaking this down into time horizons, I'm going, all right, I got my first bucket, my 1 to 2 year bucket, maybe my 3 to 10, maybe 3 to 8 year bucket. And then I got my 10 year plus money. That's my third stair step. That's where I can go demand the most return on my capital. We're focusing on the short term. I'm telling you what, right now, cash and cash equivalents, money market accounts, treasury bonds, it's not a terrible place to be. I mean, we're talking like 5.5%. We haven't seen rates like this in a long time, man, and it feels good to get some return on my cash. That's where I'm telling my clients to go is get those high yield savings, get those treasury bonds, and say thank you for the free 5%.
Okay. Yeah. So, and that's the other side of it, right? People love to talk about these interest rates. Every time you turn around, Jerome Powell is coming out saying, "Hey, inflation is bad," and blah blah blah. Then you have the scary story of Paul Volcker back in the '80s, what he did to interest rates coming out of the '70s, going into the '80s, pretty much just ran us into a recession. But people are becoming scared. What are the positives of a high interest rate society? Everybody's saying, "Man, look at these mortgages. Mortgages are going up. You're seeing the stock market is going down, things like that." What are some positives that you could think of having taking advantage of these high interest rates?
Well, yeah, that's kind of the first one is that finally your cash is worth something. And it's tough for people out there because not everyone sees it that way. Maybe you and I have some clients that have big piles of cash and they're like, "Well, I don't know what to do with it. It's my emergency fund." And we're like, "Well, put it in cash. You're getting 5.5%. There's nothing wrong with that. That's actually pretty darn good." But if you're on the other side of the fence saying, "I want to buy a home, I need to buy a car, I need to get a loan." Well, now you're really getting hurt out there and you're paying maybe 6, 7, 8, 9% on some of these rates. And gosh, that home that you thought that you were going to afford, that you were saving up for so diligently, like every advisor told you to do, well, shoot, now the mortgage isn't affordable and you're out of the loop. So it just really is a tough environment depending on which side of the fence you're on. But the positives is definitely the yield. You're getting something for your cash. You don't have to go out and watch your stock market portfolio look like a heartbeat monitor. You can get a guaranteed FDIC insured 4.7, call it 5% rate of return. That's definitely something to get excited about, at least in the current market.
That's a very good advice there. Now, ask yourself this question: say if you're someone you was very bullish in the market. The market took off February. You're like, "Wow, I'm getting some returns. The market is back now." So you became bullish, maybe a little bit too bullish.
Sure.
Now, come around, now we're looking at October. It's getting pretty cold. What do you say? Do you just say stay put? Would you just liquidate and run the cash? What would you do in that scenario?
Well, Prince, we gotta go back to our stair steps, man. We gotta talk about when do you need the cash? If you need the cash in the next 2 years, we know the best decision. We can't get too risky in the stock market. That's gambling.
Hmm.
Maybe we can get risky here and there. I'm all about taking a couple bets here and there, small percentages of the portfolio perhaps. But the backbone of the portfolio, the backbone of your wealth building, it's gotta be based on those time horizons. So even though the market's getting cold, even though we're down, what is it, 2.5% over the last 5 trading days, that's scary. That's scary stuff right there. Even though that's happening, if you don't need that money for 5, 10, 15 years plus, what's gonna get you the best rate of return? Running for the hills and getting that 5% guaranteed, which isn't necessarily guaranteed tomorrow. We know interest rates can drop and then those yields are going down with it. Or is the stock market? Well, historically speaking, evidence tells us you're probably going to do better over a 5, 10, 15-year period holding on to those equities. So we got to kind of let history guide us. That's obviously no guarantee of future returns. But if I'm trying to be a betting person, I'm trying to give myself the best opportunity for growth. That's what I'm telling my clients is we got to stick to our guns and stick to the plan.
Okay. Well, now you're seeing people, you know, eh, over the last year, you heard this terminology, I'm pretty sure. I'm pretty sure you probably dealt with it in some type of capacity. People are now saying, "Hey, is this the perfect time?" And what are your thoughts and feelings on cryptocurrencies?
Oh, that's kind of like, an old forgotten tale, it seems like, right? Oh, it's like only 2 years ago, it was like
Like,
all the craze, and
mm,
now it's like, "Oh, crypto's old, AI is in."
yep.
And it's so funny how the shiny object just continues to change. And I think that's probably the bigger important lesson is that us as humans, we are designed to try to do whatever we can to better ourselves. And as investors, sometimes that actually ends up being the wrong thing to do. Similar to when you feel scared, probably not selling, probably hanging on is the best thing to do, even though your gut instincts are telling you to get out and sell. So, crypto, man, to be honest with you, I own a fair share, less than 5% of my overall portfolio, but it is a definitely a material position. It's, a lot of the main names in Bitcoin, mainly just because a lot of folks who I look up to and who I believe to be smarter than I am are excited about that space, but I could kind of almost see I'm glad that Bitcoin and the cryptocurrencies are out of the news because that kind of it feels like a lot of the silliness is out of it, and maybe cryptocurrencies could be started to take a little more serious. Maybe we can see that market cap of Bitcoin continue to slowly edge upward. I believe there's another halving process sometime next year. I'm no expert in crypto, but I do believe in it to the extent that I want to at least have I want to throw my hat in the ring and have a small position.
I tell people all the time I feel as though it's like a lottery ticket. I'm like, hey, these little lottery tickets. I go into the gas station, I stretch off. If I win, I tell everybody how smart I am and how much of a genius I am. If I lose, I put it in the trash can, act like it never happened. So, so
There
I
you go, Prince.
tell people that that's my philosophy because I look at it when you look at it as an investment, it's like, well, how can I really make it an investment where I don't know where these things are coming from, who's reporting this information, unregistered, things like that. So that's like my kind of take on it. But I definitely want to get your take on that. Now, Colin, something that we always heard that was a for sure win over the last, forever. You always heard your great grandparents say this. Everybody always said this. It wasn't until 2008 people started to say a little different. People always said, "Hey, get a rental property." I think it was Fannie Mac put out that they're doing 5% down, and you could get a multiple unit apartment, right?
Mm,
So people are getting multiple, duplexes, apartments, or whatever, for only 5% down. But we
mm.
also saying that the rental market could possibly be oversaturated because one of the downsides is as interest rates go up, it means that mortgages going up, and when mortgages go up, it leaves a little bit more room for people to charge for rent. So we're seeing these rent prices go up as well. When you look at it, this renters market, is it a hot market? Is it a dry market? What do you think about that? Buy a house, rent it out.
A really good question. I get this question a lot from clients, whether they're trying to find a place to diversify from just their stock and bond portfolios, or maybe they are buying a new house and are still hanging on to that old interest rate at 3%. And they're like, I just can't get rid of it. It just seems like such an opportunity. It's I think that's a tough thing to say, and it's really depends on the individual because, if you get a property manager, a lot of your margin can be extinguished, as you know, and if we look at single family homes just purely as an asset class, if we're thinking Bitcoin as an asset class, large cap US stocks as an asset class, bonds are an asset, single family homes being an asset class, well, Nobel Prize winner Bob Shiller did a great job putting together the Shiller Index for us, showing us what individual home price sales have looked like for the last 50 years. And we've shown that single family homes grow at about 4.5%. So when you're looking for a place where to go with your cash, with your capital, do you want the stock market yielding around 8, 9, 10% annualized rate of return, or your single family home at 4.5? Well, that doesn't tell the whole story because maybe you're gonna be receiving some additional cash flow, maybe you're positive month over month and you're actually cash flowing on the property. Maybe you have a low interest rate mortgage and you actually have a little bit of leverage there, so that can kind of juice those returns a little bit. It becomes a complicated, uh, answer and a complicated question pretty quickly, but I think the biggest thing that I encourage folks to think about is, are they actually diversifying here? And do they also potentially want to have a part-time job? Passive income, I think, is a very, obscure term for rental income because when you're getting a phone call at 2 in the morning that the toilet is flooding, or the gutters are flooding, or the roof is flooding, or something is breaking, it doesn't feel very passive anymore. Now
Mm,
it feels pretty active. You gotta be calling, either contractors and doing that work yourself, or you're hiring it out and then say goodbye to your margins. And also, you always have the individual risk of a client not paying. We've all heard those stories before where a tenant says, "Hey, I lost my job and I'm not paying this month." Well, Good luck taking them to small claims court, kicking them out. If you're in the beautiful state of California, where I've been for the last 4 years and, having clients that have rental properties, there's really, really strict tenant laws, and they might be able to legally stay there for 2, 3, 4, in some cases, 6 months before you can actually evict them.
Mm,
So, we gotta be and now all of a sudden, if you're expecting that cash to pay the mortgage, but you're not receiving that rental income anymore, you could find yourself in a really tough situation. So I kind of preface that with, make sure that you run the numbers, make sure you got a good emergency fund, and you could absolutely get better returns than the market, but you also are taking some additional risk. So is that additional return worth it? A lot of times, if the market's getting you 8 or 9% and you don't have to do anything, and your rental property's getting you 8 or 9%, but you have all this additional risk, gosh, was that really worth it? But
mm.
if your rental can get you 13, 14, 15%, okay, well, then that juice might be worth the squeeze.
Okay. Now, someone asks you the question, they look back and they say, well, real estate seems to be a little tough right now, messing with the margins. When you're watching, for prime example, if you have to go spend, 10 grand to go, I don't know, get a new roof or something like that, that could knock out, and just if you was only making $100 $200 a month, that knocked out 5 years of margin just fixing one thing. Hopefully you can get some equity on the other end, but if not, then it's like, was it really worth it? So the other thing I want to ask you, people are like, hey, you know what? Kind of like I remember this feeling in '08. '08, I was 24 years old. Felt like the end of the world was happening. We was in Afghanistan, Iraq. You seen Lehman Brothers disappear. You saw
Crazy.
Goldman Sachs come to his knees. You saw Ford, General, these big household names, Bank of America, all these companies went into financial stress, right? And people, we start to look for different things. We was like, okay, the stock market is dead, real estate is dead. What do I do now? So I prefaced that with saying in 2023, people are looking for new ways and different ways. What is a new avenue out there that people are not talking about that you're like, hey, you know what? This might be a place to look into.
Gosh, I guess I think one really, really exciting thing is that the ability to become an entrepreneur for almost no money, very little overhead, with fabulous tools. I don't know if there's ever been a better time. You can hop on TikTok, you can see people, becoming creators. They can open online stores. They can start advertising and selling products, drop shipping with a really, really simple website that they can put together in 5, 10, 15 minutes, click and dragging and dropping, writing things out. I think it's a really exciting time for people that want to change things up. They have some spare